CBK bonds or affordable housing. Where should you invest your money for long-term growth? If you are thinking of passive income for the long term, real estate and CBK bonds are some of the most common investment vehicles in Kenya. In this video, we shall compare the two vehicles using the example of two different investors. One who puts the 4.5 million shillings in a 15-year bond, and another one who buys a 3-bedroom affordable housing unit in the Nairobi metropolitan area. Let's start with the bond. For the purposes of this illustration, we shall use the example of a recently issued bond that has a coupon rate of 14.188% per year. A bond pays coupon interest every 6 months, and if you invested the entire 4.5 million shillings, your yearly gross interest earned comes to 638,460 shillings. When the 10% tax is deducted, your total yearly net interest comes to 574,600 shillings. This means that every 6 months, you will earn around 287,300 shillings. At this rate, you will double your money in 8 years. In 15 years, you will have made 8.6 million shillings in net interest. And when added to your principal of 4.5 million shillings, your portfolio, which is a combination of interest and initial investment, will total 13.1 million shillings. Now let's look at the second option, which is affordable housing. For real estate, we will use the example of Ruiru affordable housing, which is complete and was recently sold out. A 3-bedroom unit was going for 4.5 million shillings when bought in cash from the developer. Right now, the houses are being rented out for around 40,000 shillings per month. If you were to buy a similar house and rent it, you would earn a gross income of 480,000 shillings per year. In Kenya, residential rental income is taxed at the rate of 7.5%, meaning that your net income will drop to 444,000 shillings. For purposes of this comparison, we assume that 10% of the gross rental income, which is around 48,000 shillings, is used for maintenance and caters for the month when the house remains vacant. This means that when the 48,000 shillings is hived off, you are left with 396,000 shillings. However, it's unlikely that the rent will remain the same for 15 years. Recent surveys have shown that Ruiru has an annual rental increase of 7%. When we adjust for this increase, then we'll have earned a net total of 9.95 million shillings in rental income for the 15 years that you own the house. Now here is the comparison. With 13.1 million, the bonds investor will have earned 4.5 million shillings more than the one who opted for the 3-bedroom house. However, it is important to note that the person who invested in an apartment will still have their assets after the 15 years and their property will have increased in value, while that who opted for the bonds will get all their cash back and stop earning interest. And this is while their money will have a lower purchasing power because of inflation. Assuming Kenya has an average annual inflation rate of 6% for the entire 15-year period, the 4.5 million shillings held today will have a value of 1.78 million shillings. While the purchasing power of the earnings from the bond will have reduced, the real estate project's value will have increased. According to recent surveys, the capital appreciation of a house in Ruiru is around 5% per year, meaning that in the 9 years, the value of the apartment will have grown from 4.5 million shillings to 9.4 million shillings. It is important to consider investment preferences before investing. If the goal is to have an income, bonds have relatively higher returns, but if you want to leverage on appreciating assets, then real estate makes more sense for you. For more investment tips like this, we have a partnership with 𝐊𝐬𝐥𝐥𝐢𝐴. 𝐊𝐬𝐥𝐥𝐢𝐴 is a free AI assistant on WhatsApp that can help you compare different investment vehicles, stay updated with financial news, schedule meetings, summarize long documents, and even apply for a loan from Numida. To apply for the business loan, visit our website at money254.co.ke or use the link in our bio.